Hi, I'm Roger Conrad, a co-editor of Vital Resource Investor, and what I want to talk to you about today is commodity prices vis-a-vis the US dollar. Now, we've seen a tremendous interest in commodity and vital resource investments over the last several years. Sort of trailed off at the last part of last year when people started worrying about a US recession, and it's really picked up though at the beginning of this year as investors have seen that these other markets where most of the demand for these things like copper and aluminum, nickel, agricultural products and so forth, these countries that are really comprising the lion's share of demand in Asia, Middle East and so forth, demand is not flagged. So they're still developing, they're still sucking down huge amounts of these things. Supplies are tight, resource nationalism is on the rise, and the result has been very bullish. Also helping them though has been the fact that the US dollar has really entered a collapse stage. Countries around the world have taken a look at, or investors around the world have taken a look at what's happening in the U.S. The Federal Reserve is frantically cutting interest rates to keep the banking system afloat. And when the Fed does cut interest rates, that of course reduces the value or the value of holding U.S. dollar investments, particularly interest-bearing ones. So it tends to push down the price of the dollar versus other currencies. Now, most of the commodities are priced in U.S. dollars, so when the U.S. dollar comes down, the price of the commodities goes up. And that's been a major part of the profits that we've seen in many of these vital resource stocks, and particularly in the commodities themselves, things like gold and so forth, over the last couple of months or so. Well, I think it's time to take a little more of a cautionary look. We're still very, very bullish on the long term. These long-term factors about Asia sucking down more commodities are still very much with us. They're going to be with us for a very long time. Resource nationalism is going to continue to become a bigger and bigger factor, constricting supplies. So the long-term picture on these things is very, very bullish. But on the other hand, the near-term picture with the U.S. dollar is a little more iffy. And that's because other countries around the world are becoming very worried by the fact that the dollar has really dropped off a cliff. A lower dollar means that it's much harder to export to the United States, which really hurts a lot of countries and a lot of their exporters in those countries. So by the by, you've got a situation where a lot of foreign central banks are putting pressure on the U.S. central bank, and government intervention in the currency markets never really has much of a lasting impact, but it can have a very severe short-term impact. So this is a factor we're looking at with these commodity prices. A lot of these commodity producing companies which could take a hit if the US dollar does pick up, and that's a good reason really to, if you have a big profit in some of these positions, to take a second look at that. Again, nothing has changed in the long-term picture. Things are very, very bullish, but this is I think a prudent way you want to play a market that is historically extremely volatile with a lot of long-term opportunity. And a lot of volatility. There are a lot of chances to take money off the table along the way. So we'll have more, of course, in detail for Vital Resource Investor subscribers in the regular weekly issues. Meantime, thank you for tuning in, and we'll look forward to speaking to you next time.